Thank you everyone for joining today's webinar. My name is Connor Kitko. I'm a marketing analyst here at YCharts, and hosting our webinar today is my colleague, Customer Success Manager, Kimberly McMenemy. For today's webinar, we will focus on keeping up with investing trends with a particular focus on smart beta. Throughout the webinar, we'll have a live Q&A via chat where you can enter questions in the questions section in the lower right-hand corner of today's webinar. We will do our best to answer all questions in a Q&A session at the end of the session today. Any questions that are not answered during the webinar or Q&A session will be answered by your support contact. Please keep in mind that the content of this webinar is meant for educational purposes only and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. As always, a recording of the webinar will be made available on the website and sent to all attendees. Now, I'm going to pass it off to Kimberly to get us started.
Thanks so much, Connor. And thank you all for attending today. I'm very excited to be speaking about our topic, smart beta. We've got great attendance today, and I must say I'm not terribly surprised by that, just because smart beta seems to be a bit of a buzzword. We get a lot of questions and interest about finding out more, so we figured we would address it in a webinar. So as we get started, I'm going to focus on a few things. One of them is really defining what smart beta is, and I do want to have a little bit of a disclaimer that when I use the term smart beta, I'm using that as a bit of a catch-all. So you might have heard the term smart beta, some people call it alternative beta, factor-based investing is another popular term, and I'm really going to group these together in one methodology, which I'm going to refer to for this webinar, for simplicity's sake, as smart beta. Now, once we go through that, I'm going to dig into why it's so popular and how we know it's popular, and also look at some of the tools as to how that can facilitate your investing. Now, to answer the first question, what is smart beta? We really have to look historically. And when we look historically, the very first step is looking at stock picking. When investing was younger, let's say, stock picking was really the methodology of choice. So you're looking at individual companies, assessing them, determining whether they're appropriate investments to park your money. Now, there were some downsides to this. One of them is obviously the burden of cost and energy that went into making sure that you were determining that this was the right investment. Now, as we move forward, what we really see is kind of that next iteration is indexing. And the benefits of indexing really are twofold. So the first one is from a returns perspective. What we saw throughout research is that holding an entire index, so mimicking the underlying holdings of the index as well as mimicking the appropriate weightings of the index, tended to outperform individual stock picking. And then in addition to that, because it was more of a passive strategy, it saved on a lot of the costs and a lot of the effort that was put into individual stock picking. So between these two, we saw a big movement away from stock picking and looking at individual companies and towards indexing. Now, as we look forward more recently, we're really seeing smart beta as kind of the next iteration there. So what exactly is smart beta? Smart beta, to speak about it broadly, is really similar to indexing in that it's holding the underlying holdings of an index typically, but the weightings are different. So instead of weighting by market cap, the way we would do with indexing, it's going to overweight certain holdings and underweight others in order to capture a certain premium. So if you're familiar with the CAPM, this is really an extension of that. I'm not going to get too deep into portfolio theory for the purposes of today, but this is really seen as an extension whereby by changing the weightings, overweighting some, underweighting others, you can capture certain factors, certain premia. And the most popular include size, value, momentum, quality, volatility, and so forth. So one example of this that we see is certain managers maybe will look at a basket of holdings, and they're going to identify which of those companies are those where the prices are rising, but all the fundamentals are remaining the same. Now, those companies that they've identified, they're going to underweight those. Conversely, a fund manager might look at a basket of holdings and identify those companies where the price may be dropping and decreasing, but the fundamentals remain the same. And those are where it's going to overweight. And the idea behind this is that this methodology, it's not active per se, but it's allowing you to tailor those weightings to capture those premia in a way that's going to get you returns beyond just simple indexing. But because it's rules-based and you're not picking individual companies, it has a lot of the benefits of passive investing, whereby the costs are kept relatively low. Now, the next question beyond what is smart beta is really, why do we care? And what's important to address in that is this is something that we're seeing a lot of attention paid to and a lot of money going towards. So even if you are someone who's perhaps a strict stock investor, someone who's not really looking at smart beta for themselves, it's important, especially as financial advisors, to be kept abreast of different trends in the market and also to be able to answer those questions. Now, how do we know that this is popular? And how we can really distill that down is we're seeing new fund flows into smart beta funds. Now, NASDAQ published an article, and within that, they indicated that fund flows between 2016 and 2017 into smart beta ETFs increased by about a third. So think about that. That's about $70 billion of new money that's going into smart beta ETFs. Even if you're not someone who's a smart beta investor, it's really important to be kept abreast of that. Now, the next way we know that this is really has some staying power is the number of new smart beta funds launched. And I personally was curious about this, so I actually turned to our screener to see exactly what that looked like. And I'm going to show you what I did. So right here you'll see I'm in the fund universe. It's got about 65,000 funds. And what I love is that, we're always improving and adding new things to YCharts. So if I go to modify fund universe, at the bottom here, what you're going to see is this YCharts proprietary category. This is new. So if I click on that and click on fund groupings, you'll see we just added ESG designated funds as well as smart beta designated ETFs. So I'm going to go ahead, I'm going to click through and pull up that list of smart beta designated ETFs. And when I do, it generates a list of about 1,000 funds. Now, I was curious not just to see a list of these funds, but to actually determine which of these have been around for a while and which of these are new. So that's when I turn to add a metric filter. And if I click on browse, I want to see how many have been around for a few years. So I'm going to do years since inception. And I'm going to change that to less than, and we'll do 3. Now, when I click submit, what this is going to generate for me is a list of smart beta designated ETFs that have been around for less than 3 years. And when I put in those inputs, you'll see it's almost half. So what that really means is that almost half of these funds were created within the past 3 years, kind of just continually confirming that this is an overarching trend. Now, I know some of you, if you tend to work with certain managers in particular, dimensional fund advisors, AQR, these are kind of the names that you hear thrown around a lot. They're really the pioneers in this factor-based investing. But to further show this is an overarching trend within the market, I'm going to throw on just fund family, just to give a little bit more color. And as you go through this, what you're seeing is that it's not just these two managers that are jumping on the smart beta bandwagon, if you will. We're seeing all types of managers from Vanguard to BlackRock, UBS, Barclays, and so forth who are launching smart beta funds. Now, this is really important because it's showing you where the market's shifting. So I'm going to go through some use cases because that's going to show us what really we're going to do with this. And I'm going to go through 2 examples. So beyond this, there are 2 types of clients that we tend to work with. And there are different tools that really cater to both of those investment styles. The first one I'm going to go through is really someone who is making those investment decisions. Maybe they're the portfolio manager. Maybe they're someone who's really involved in the research and making sure that the individual holdings are appropriate for their client. And the second use case I'm going to go through is someone who's maybe not making those investment decisions. They're not really in the weeds is the first example, but they're client-facing. They want to speak intelligently to their clients and be able to have something to show them. So for that first client that we work with, once again, I'm going to find myself in the fund screener. I'm going to hit reset all just to clear those inputs that I put in. And maybe I want to create a screen that's going to look at some smart beta funds and determine what's really going to fit well for my portfolio and make sure that it's staying within the parameters that I want. So once again, I'll click on Modify Fund Universe. Again, YCharts proprietary, that's where you're going to find those smart beta designated ETFs. And once I have that list, I'm someone who really pays attention to expense ratios. I certainly don't want my returns being eaten away by expenses. And often people that tend to gravitate towards this methodology also tend to be sensitive to expenses. So I'll add a metric filter in here. You can certainly type expense ratio just in here, or you can click on the browse and type it there. But for this, I'm going to say I only want to see funds with an expense ratio perhaps less than 0.8%. And because it's an expense ratio, because I put that in here, our program's smart enough that it knows that this is a percentage. You don't have to tinker with that. So we'll do 0.8% as the threshold. Now, in addition, dividend yield is something that I like to pay attention to, so I'm going to throw on another metric filter. And if I go in here, I'm going to do dividend yield TTM, and I want to make sure that it's greater than or equal to, I'm going to use 1.75. That's about what we're seeing with the S&P, just as a kind of general benchmark. And I will add that in there. Now this is still yielding a bit of a long list, maybe not as tailored as I want. So I'm actually going to go back in, energy something maybe I'm watching. I want to only look at those that are focused on energy. So I can go back once again to Modify Fund Universe, and we'll do Fund Focus here. Now within the stock sector, perhaps I wanted to have an energy focus, and I'll click Submit. Now, already just by putting in a few different filters, it's going to whittle that list down to a pretty narrow list. I always recommend when I speak to clients, if you're not saving the screens that you run, the charts that you create, you're not taking full advantage of the time-saving capabilities of YCharts. So I always recommend, as with anything, you'll see in most of our tools a drop-down like this where I can go and I'm going to click Save. So I'm going to save this as Smart Beta Energy ETFs. Now, I was speaking to someone yesterday. They actually asked me, it's a great question. They said, what is, in your opinion, what is the most underused or undervalued of the tools? And I'm a huge fan of comp tables. So if I go into the tools drop-down again, you'll see comp tables right here. Now, once again, I want to emphasize, the more you save, the more of a time-saving tool this becomes. So I can put in individual securities here, either by name or by ticker. But I love this list feature here. So I'm going to click on Browse. I'm going to make sure it's set to Funds. And then if I scroll down, you'll see Save Screens here, just above Watch Lists. So just to delineate those two, watch lists are going to be static lists of names. Screens, Save Screens, are going to continually run those parameters and only generate companies, ETFs, funds, and so forth that fit them. So I'm going to go into here. I'm going to pull up that Smart Beta Energy ETFs list that I just created. And what I love about this is we can pull in a metric set that I've already created. Now you can create basically almost as many metric sets as you want. I've never seen anyone run out. And I just have a few different metrics that I can set in here. Again, if I wanted this to include more, I certainly could. And just essentially by pulling in the list and the set, I've already generated this template here. I personally love scoring models. I think that it's great that I can look at this and sort, for example, by max manager tenure, by returns, by discount or premium to NAV. That can be great to look at it through one lens, but what I like about scoring models is you can look at it through essentially a combined or blended lens. So let's actually create a simple one right now. So if I go in here, this is going to be a blank template. I'm going to click Add Score Component, and that brings me to our list of 4,000 plus and counting different metrics that we can put in here. So as with probably anyone else, I pay attention to returns, of course. So I'm going to throw in 1 year total returns daily. And naturally, because of this, I of course want higher returns. Higher is better. I'm going to throw on another score component, and this is going to be the maximum manager tenure. And we'll do that. Now, of course, I want a long-standing tenure, so we're going to keep that as higher is better. For some metrics, depending on what you're using, you can change it to lower, but for this, it's higher. And I'll add just one more. So I'm just going to add an expected Sharp. Likewise, higher is better. Now, if these three were of equivalent significance to me, I could weight them, 33% across the board. But for this one, maybe I'm someone who's focused more on returns. That's going to be 50% for me, and then I'll just split it evenly between these. So I'm going to save this, whatever you want to call it, and then I'm going to add a score column. So the nice thing about this is I now have this column where, based upon what I care about and how much I care about each of those metrics, I can generate not only a list that fits those parameters from the screen, but is also put in an order that reflects my priorities. Now, this is good for someone who's really in the weeds, but I mentioned the second use case for someone who's maybe more of an asset gatherer, maybe someone who's more client-facing, isn't really making distinctive decisions like this. We see some people, especially within this methodology, maybe they only work with one fund manager or the majority is with one manager, so they feel that they're not really making those decisions as much. That's where the Excel templates can be great. So if I were to go back into Tools, you'll see the Excel here. And if you click on Templates, I highly recommend you check these out. We created this most popular category just to make it simple for you. But there's a ton of different resources here. I would encourage you to check them out. One of my favorites is this portfolio side-by-side comparison. That's going to let you dig into, a great example is a prospect's holdings as well as what you might recommend to them, but it really can be used to contrast and compare any two sets of holdings. So I've kind of prospected one out, and I'll show you how easy it is. So you'll notice in our templates, these blue cells are going to be the input cells, and then essentially everything else that's either in white or gray is hands-off. You don't have to do anything. As long as you have the Excel add-in, it's going to pull in that data automatically. So all I'd have to do here is I'm going to put in the prospects or maybe the client's ticker symbols, what they hold now, and then the weightings. So this is done by shares. I would point out that if, for example, maybe they only gave you dollar amounts, you can change that really easily, or percentages. It's all coded out, so it's ease of use. Now, model portfolios input tab, we see this a lot with clients who maybe have specific models that they might pitch to clients. I just kind of threw in this recommended portfolio here. The nice thing is, if these are coded out in here, if you have just the tickers and the weightings, they're all going to pull through with the click of a button. When I do that, it's going to generate this 2-page report. This is something that's massively popular. So if you look on the left-hand side, we have this fictitious prospect Jane Smith's portfolio, and then maybe a portfolio that we're recommending to her. Now, this is going to break it out really visually, which a lot of prospects resonate. They don't want to dig into the data often, though we have it programmed out so you can. But you'll see the asset allocation breakdown. Maybe this person's, very stock heavy. Maybe you want to throw some bonds in there. Sector breakdown, if we look at this, this individual is very highly weighted towards communication and technology. Our recommended portfolio really is a bit more all-encompassing. And as you go through, I won't go through all of these, but this is a nice way to really visualize what you can offer to a client. I'll even note down here, we have a risk section, which is going to show that the recommended portfolio is going to have better standard deviation as well. And another thing that people tend to appreciate, if you are someone who looks at expense ratios, it's nice to be able to look at the expense ratio on a portfolio level, not just at the individual holdings. Now each of these is going to generate a tab where if you want to get into the data, you can. There's a lot of information that you can dig into here, but this two-page report, particularly for those that are client-facing, tends to have a lot of value. Now, I think we've covered a lot today, so I'm actually going to turn it back over to Connor. It looks like we have maybe some questions that came in. Would love to hear them.
Thank you so much, Kimberly. And yes, we did have a few come in. So we'll turn it over into the Q&A portion of today's webinar. The first question we have is, what are some of the most popular smart beta funds currently in the market? Kimberly?
Sure, absolutely. I do want to clarify we are not giving investment advice. However, if you wanted to look at what were the most popular, I think that's where screening tools could be really useful. So once again, I'm going to go back into here into the tools drop down. We'll go into that fund screener, which you spent a little time on earlier. So if we wanted to, for example, look at what are the most popular, perhaps the biggest smart beta funds, I'm going to go to Modify Fund Universe again. Again, YCharts proprietary, pull up that smart beta list. And then let's look at AUM. So I'm going to add another metric filter. And we can either just type AUM, you can type assets under management. Everything's programmed in, so it's very smart about knowing what you're looking for. Now, you'll notice with the metric filter, I often will set it either between two parameters or maybe less than or greater than. But this rank sequential can be great in a case like this. So I'm going to do maybe the top 15 holdings. That sound good? Perfect. So I'll do the top 15 holdings. Naturally, higher value is better in this case. And what that's going to do for me is with those two parameters, it's going to generate a list of by AUM, what are the 15 biggest smart beta funds.
Awesome. Thank you. And I think we have time for one more question. So we'll do, what are some of the cons of investing in smart beta funds?
Oh, it's a great question. I think what springs to mind, at least kind of top of mind as a con, is that if you are someone who's very, very cost sensitive, indexing might be a better option for you. As I kind of delineated the two earlier, indexing is really going to allow the market cap of the individual company to determine those weightings. Smart beta, factor-based investing, and so forth, there's a lot more thought, or perhaps I shouldn't say a lot, but there's more thought put into what those weightings should be. So from a pure cost perspective, it's typically going to have a higher expense ratio, though I would say it's not massive. But yeah, for people that are very focused, their priority is keeping costs low, that's something to consider. Actually, another one that I think would be kind of timely to talk about, if you tuned into last month's webinar, my colleague Jean was talking about volatility. This is actually really interesting as I was preparing to speak to you guys today. Because I was looking, volatility is one of the different factors that we see in smart beta funds. So I just assumed that given that we've had such low volatility for such a long time, up until essentially this year when we saw it spike up, that volatility funds would have been doing phenomenally. And I found that really wasn't the case. So when I looked into it, a lot of this can be attributed to overcrowding. So because, everyone's aware that volatility spiked up this year, it looks like a lot of investors kind of fled towards volatility smart beta funds. And we found that when you have that overcrowding, kind of that mob mentality, if you will, that can have the impact of eroding those returns. So that's definitely something to consider.
Definitely. It's very interesting. All right, that concludes today's webinar. Thank you, Kimberly, and thank you again, everyone, for attending. That's all the time we have. And as a reminder, a recording of today's webinar will be available on our website as well as sent to all attendees. Thanks.